What's up everybody, I'm AK and welcome to the Minority Mindset. You ever feel like everybody's just always asking you for money? I do. Especially when it comes to money managers. But I mean, that's kind of their job, right? To ask for your money so they can manage it. But are they worth it? Or should we just be looking at index funds because they are so much cheaper than a money manager? That's the topic we're going to talk about in this video. Index funds have been gobbling up people's savings at an extremely fast pace, and that's because they are so much cheaper than those money managers, as I've already said. Both money managers and index funds will charge you to manage your money. But an index fund provider like Vanguard that provides ETFs for people, they will charge as low as 0.05% on your money. So that means for every $1,000 that you have invested in a Vanguard index fund, you're only gonna pay 50 cents of fees for the entire year. Not bad, right? But when it comes to your typical money manager, they might have a fee of 1%. And if you go with a hedge fund, the fee might even be 2%. So at a rate of 2%, for every $1,000 you have invested, you're paying $20 a year. That's a lot different than 50 cents. Now I know these fees might seem trivial, whether it's 50 cents or $20. But if you look at it over a long enough time period, it's not unreasonable to think that your wealth will grow to $1 million over time. And when you got $1 million, the fees aren't gonna be that tiny. If you put $1 million into a Vanguard index fund, you would be charged $500 a year. But if you go with an expensive 2% hedge fund, that would be $20,000 in fees per year. That's pretty expensive. The problem with expensive fees is that they really bring down your compounding rate over time. So your account can't grow properly if you're paying too much in fees. And you think about this over 30 years and it will make a huge difference. So imagine two different investors, Julie and Bob. Julie puts $10,000 into a Vanguard index fund that grows at 6% a year and she only pays 0.05% in fees a year. Bob puts his $10,000 with an expensive money manager who charges 2% a year but returns 7% a year. At the end of 30 years, Julie's account balance will be over $56,000. Bob's balance will be only $43,000. So even though Bob's expensive money manager, even though he outperformed the index because he was making 7% while Julie's index was only making 6%, right? Even with that difference, Bob still ends up making much less over the long term. That's how much expensive fees affect your bottom line. Albert Einstein called compound interest the eighth wonder of the world because of how it can build your wealth. But the disclaimer is that it only works when your money can compound without high fees. And here's the sad part. In the example we just showed, the money manager actually is outperforming the index, right? But in most cases, that doesn't happen. In most cases, the expensive money manager actually underperforms. According to Dow Jones research, 90% of managers don't beat the market over 5 and 10 year periods. So not only are you paying them a bunch of money in fees, but you're paying them to underperform. Now that's 90% of managers, right? But the other 10%, sometimes you can find managers that way outperform. I'm talking like instead of 6% that year, they make 60%. And I mean, that's what everyone's looking for when they go to one of these managers, right? But the truth is these guys are extremely hard to find. And that's because they're so rare. Markets aren't easy. These 90% of managers underperforming, they're not stupid. It's just really hard. Finding an index fund though, that's pretty easy. And it should perform exactly how you expect it to. The thing you gotta watch are those fees. So how would you even invest in one of these Vanguard ETFs? Well, I got something cool for you. It's a really cool tool that you can use to invest commission-free, which means you don't pay a fee to place your investment. Because you don't want to be paying a commission and then paying that 0.05% fee too. There's too many fees. I'm talking about M1 Finance, and I'm going to put a link down below in the description so you can find out more about it. But it's this really cool new trading software that lets you buy fractional shares. It's really visual, it's user-friendly. It's all around a great software to use to invest. And if you'd like to open a free account and learn more, I'll put a link down below, like I said. Now, Minority Mindset is an affiliate partner with M1 Finance, so we get a small commission if you open an account, but that doesn't cost you anything. Thanks for watching. If you enjoyed this video, then make sure you hit like and share it with one friend so we can spread the word. And make sure you subscribe to the Minority Mindset channel and hit that notification bell so you never miss our new stock market videos that come out every Monday at 7:30 a.m. Eastern. And if you want more of me, you can check out my personal channel at Fallible, where we publish videos every single day all about the stock market and business. I'll see you in the next video. Bye.